Carney's speech last night wasn't what we had last year, where he talked about interest rates. This was focusing really on banks and the financial system. What did we learn?
Yeah, I think it's a sign that the bank itself is going to be clearly focused on its supervisory and regulatory role in financial markets. And I think a lot of people in the analyst community were thinking that we would get a message on interest rates from Mr. Carney last night. And, of course, he didn't really mention them at all. So I think that was a surprise to many people. I think it's a sign that the Bank of England is still comfortable, as it was last month when it released the quarterly inflation report, that the market path for interest rates will allow them to meet their inflation targets within the next 2 years.
Neil, we also heard a little bit about the referendum. Right. If you were to look at what you're most concerned about, so they have to find this system of dealing with the financial companies. They have to be sure that they're attractive as a UK, but tough on, in terms of regulations. But then they have this huge referendum problem that's going to stop investment in the UK, or is it?
Well, that's a good question, and certainly there is an argument that the EU referendum could certainly create some uncertainty for international companies, for international banks, for international investors. We've seen elements of uncertainty with the Scottish referendum last year, for example, and indeed in the recent election, and that can have an adverse impact on the real economy. However, as regards the banks, I think it's interesting, particularly with regard to HSBC, it wasn't so much anything to do with the EU or an EU referendum, but it had everything to do with a bank levy and the relative attractiveness of either being located in London, where they would face higher taxes, or in Hong Kong, because of the nature of their balance sheet, lower taxes, and it's quite considerable, and I think that's what it really boils down to. So the Chancellor is correct in trying to make the city attractive for financial institutions. I think a lot of people in the financial industry would say the level of regulation and compliance has reached such a degree that it's now becoming an adverse factor for the industry. So it's achieving the right balance. I think Mr. Carney is right to set minimum standards because the city has been badly tarnished by a number of scandals. Banks have faced tremendous litigation and fines for all kinds of bad behaviour. And so clearly that's a factor in itself. So I think Mr. Carney is right to highlight that in his Mansion House speech, and hopefully will be enforced as well, because I think that from a long-term point of view, a lot of the scandals that we've seen in recent years has tarnished the banking industry.
Richard, is that right? Are we over-regulated in terms of banks? Is that what came out of it last night? Again, the government is trying to kind of play friendly, but at the same time saying, look, we can't afford to have systemic risks. How are the bankers taking it?
Well, I think Neil's right. I think there's a fine line to be drawn between trying to curb the excesses and breaches that we've seen in the past, while at the same time keeping London as a reasonable place to do business. And they're trying to find that balance, and I think it's going to be a process that unwinds over the coming weeks and months. But I think it is a big challenge for not only for the Governor of the Bank of England, but also for the Chancellor as well.
Neil, would it be disastrous for London if HSBC left?
I don't think it'd be disastrous. I think many in the industry might see it as a potential warning shot because of the costs of bank levies, of regulations, and that's probably something for HSBC to decide what's in their best interest. I think for the city more generally, I think it is important to keep competitiveness. The city historically has actually been an international centre of financial business rather than just a European centre. It's been international. That's been the history over hundreds of years. And I think that the way the global economy is developing, both in terms of trade and investment, we shouldn't be focused just on the EU. The growth is actually happening outside of the EU. And I think that my own personal point of view is that the referendum, which I think Mr. Carney is arguing should be held earlier rather than later as a way of resolving any long-lasting uncertainty, is not a bad idea. Certainly I think a referendum is politically important for the British electorate. But I'm in the camp that believes that being part of the EU is not necessarily in Britain's political and economic interests. And I know that there's many in the city who hold that point of view. Obviously, it's controversial and contentious, and the costs and benefits can be put one way or the other. So, yeah, I think that looking forward, the EU referendum issue is going to be a sort of a key factor, and how that plays out, whether the electorate in the end decides to stick with the status quo, which is quite possible, we'll just have to wait and see.
All right, guys, thanks so much.